Sung Cho, it's good to see you. Welcome back.
See you as well.
What a day to have you. No China, no problem? I mean, is that what the market is saying here?
Look, I think you have to take a little bit of a broader picture of what's been going on with the AI trade, right? And it singularly has to do with the perception around AI capex, right? Just a couple of months ago, when all of these stocks were on their lows, there was this perception that AI capex was in the later innings. And now I think we've squarely gotten to the point where now the market believes that AI capex is in the middle innings. And let's talk a little bit about why that's happened and why that shift in perception has happened. One is competition around frontier models is not slowing down. So we saw Meta, right? They took a little bit of a step back with Llama 4, but how are they reacting to it? They're reacting to it by investing a lot in AI scientists. They took a stake in Scale AI, and they're not going to slow down until they win this race. And so that's one. Secondly, the shift that's happened very, very quickly over the last 3 to 6 months is that compute is not only being used for training infrastructure, but it's increasingly being used for inference. OpenAI's revenues have gone from $3 billion to $10 billion very, very quickly, right? And then the last piece of it is just the Trump administration policies is opening up access to NVIDIA GPUs to a wider, broader set of countries like Saudi Arabia with the deal. And so you're seeing everything that was, oh no, AI capex is coming to an end. All signs over the last 3 months have pointed to AI capex accelerating, not actually decelerating. I think that's what's happening with the trade right now.
You think we've answered all of the questions about DeepSeek and the initial fears? You mentioned compute. We were thinking that day, well, maybe you need less compute and it's going to be cheaper. And it turns out, as people were saying then and you're saying now, and which seems to be correct, like, no, more compute.
Yeah, I think
that plays right into NVIDIA's hand.
Absolutely. And I think the last time I was on your show was during the DeepSeek, so it's a lot nicer to be here during the rally moments.
Have we put that to bed?
So we have. I do think we have. And I do think the market is interpreting that as an iteration and an evolution, not a revolution. And remember what's been happening, though, with the frontier models. There was this perception back then that frontier models were commoditizing because companies like DeepSeek take a lot of the things that Llama and OpenAI have built because of the open source nature of Llama in particular, that they could extract that inference layer and create an inference model associated with it. But what's happening now is the frontier model developers are actually starting to realize, you know what, we can't give away all the goods. We have to start closing parts of our ecosystem. So the foundational model players are actually saying, look, we need to close certain elements of and protect our IP because we're investing $50 billion plus a year on this, and we want to be more vertically integrated going forward. And so I think that's going to lead to more differentiation versus commoditization, and that's an important nuance for companies like Meta that are investing a lot right now.
You're suggesting when you say middle innings that the game's going to go on for a long time, and NVIDIA is going to continue to win it.
I certainly think so. Now, there's going to be other silicon companies that win as well, right? So we have ASIC companies like Broadcom, Marvell, memory players like Micron. So there's a whole host of semiconductor companies. It's not just going to be an NVIDIA, dominated game, but every dollar of capex right now, 60 cents is being spent on an NVIDIA GPU.
Wow.
And so, we know who's winning right now.